Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, November the 9th, 2010. Well, a large red body candle today, and quite characteristically different than we've seen from any candle for the past few weeks. A fairly bearish trading day today, and we haven't seen anything like that in the last few weeks. We've seen a lot of indecisive candles as the market was testing resistance up around 1191 up to 1200, and then some fairly bullish candles, some green bodies, and then quite a bearish candle. Now, the previous day we had a change of trend to the downside in the first time frame, with the market making a lower high and a lower low, and a doji type candle that tested support around 1219. The market has now taken out that support in a very bearish way with this large red body candle, with the sellers closing this market in control, but having lost a small amount of commitment at the end of the day. We can see the small shadow on the bottom, but that's not terribly significant. The bears didn't really lose that much commitment. Now, to the downside, if the market does continue trending down, and just bear in mind that today's candle was an outside day. We had a candle with a higher high and a lower low. In bar chart terms, that's an outside day, an indecisive candle. If that trend does continue down to the downside, then we do have very strong support down around 1200, a round number. So there is potential for the market to interact with there, and we should look to that area to offer potential support. It also coincides with the area where we have the Tenkan-sen at 1202, and that could be quite significant for the market. A lot of strong support all the way down through down to 1191 to 1193, which coincides, 1183. Which coincides with where the Kijun-sen is trading, and all the way down to the cloud, which is trading down around 1120. So very, very strong support. Now, in Ichimoku charts terms, we are trading up above the cloud, so the market retained its overall positive bias. So the market is bullish in the big picture terms. It is still looking a little overextended. So we are trading a long way up above that cloud. And quite often what happens when the market is trading a long way above, it tends to be attracted back towards there. We don't have any good signs, although the short-term dynamics are supporting some sort of potential retracement at the moment. The market is still trading above the Kijun-sen and the Tenkan-sen, so that means that the market has a positive bias in the medium-term and fast-term time frames as well, and we should look to those areas to offer potential support. Now, to the upside, obviously the area at these two highs here at roughly about 1226, 1227 is important for this market. It offers fairly strong resistance. Up above there, we don't have any resistance until we trade to around 1235, which is a moderate level of previous support, which was traded through significantly previously, and it was a long way away. And above there, we don't have any decent resistance until we trade up around the 1260s. So if this market can continue trending up, then the trend may continue a fair way. But the short-term dynamics certainly aren't supporting that at the moment. The trend is down, don't forget. Now, just looking at the Chiku span, that's this line here, which is simply the closing price projected backwards 26 periods. And we compare that to the current price action, and the market's trading down below there, that indicator. So that reinforces the positive bias that we have in this market. And that indicator is also trading up above the cloud, so that once again reinforces the positive bias. Now, just looking at the two candles that we've got here, this is a potential Japanese candlestick reversal pattern. It's a potential tweezers top pattern. We have the previous uptrend and quite a strong uptrend. And then we have two candles where we have the highs roughly around the same level. Now, they don't have to be consecutive candles. There can be a candle or two trading in between. But that certainly is a potential reversal. And we already have actually had the reversal with this doji type candle on the previous day's trading. So it's very important for us to watch the low of the current candle for a test of the 1200 region over the next day. But certainly still we should be looking to the resistance that was offered around 1227 for any potential change of trend to the upside.